Hello friends, in this lecture I'm going to discuss a few practical problems on the topic of past adjustments. Right? I discussed about this topic in the last lecture that we have to adjust a few entries that we have done in the past. We have to edit something that we have done in the past. We have to amend it. For that we have to pass one single entry rather than opening all the books of accounts. Clear? So let's see a practical problem on this. The practical problem says X, Y and Z shared profits of 7,50,000 in the ratio of 2:2:1 without providing for interest on Y's loan. Y granted a loan of 5 lakh in the beginning of accounting year, whereas the partnership deed is silent on interest on loan and the profit sharing ratio. So let us see what are the scenarios. I'll tell you. See, we have two scenarios. What are the scenarios? Number one is what has been done. What has been done. Right? Second scenario is what should have been done. What should have been done. Clear? It says what has already been done. Scenario number one. Scenario number two is what should have been done. Right? So it says there are three partners X, Y and Z. They have divided profits in the ratio of 2:2:1. So the profits is 7,50,000. So what they have done is they have divided this profit as 3 lakh and 1,50,000. This is the current scenario. That is what has been done by the firm. But according to the provisions of the partnership, this is wrong. Why it is wrong? Because the question says that interest on Y's loan has not been provided. First of all, see, the very first thing is partnership deed is silent. Right? Now the provisions of Indian Partnership Act will apply. And what is the provision relating to the partner's loan in Indian Partnership Act? Indian Partnership Act 1932 says that if the partnership deed is silent as to interest on loan, interest at the rate of 6% on the loan is to be paid. Right? What they have done is they have not provided for this 6% interest. Now this interest on loan, as I have already told you, is a charge against profit. That means we have to pay this interest whether we are earning profits or we are into losses. Right? So let's see what should have been done. Right? X, Y and Z. Very first thing is partnership deed is silent. Right? And the provisions of Indian Partnership Act 1932 will apply, which says that out of the profits of 7,50,000, interest on loan, right, interest on loan at the rate of 6% should have been given to Y. Interest on loan. Now what is interest on loan? Interest is 5 lakhs. 6% of 5 lakhs according to the provisions of Indian Partnership Act 1932. This comes to 30,000. So what are the distributable profits? 7,20,000. So the first mistake they did was they didn't provide for interest on loan to Y. Okay, so that means they have given the profits to the extent of 30,000 extra. Right? This was the first mistake that has been committed. Clear? Now, what is the second mistake that has been committed? The question clearly says that the partnership deed is silent on interest on loan and the profit sharing ratio. Now, if the partnership deed is silent regarding the profit sharing ratio, then profits are to be distributed in which ratio? Profits are to be distributed equally among partners. Have they distributed the profits equally here? No. They have distributed profits in the ratio of 2:1. That is very unfair on the part of Z because X and Y are getting a bigger share. Partnership deed is silent as to the profit sharing ratio, so the profits should be distributed in the equal ratio, that is 1:1:1. That means the profits here should have been distributed in the ratio of 1:1:1. Clear? See, try to understand the question. There are two scenarios: what has already been done and what should have been done. In what they have already done, they have committed some mistakes. We have to figure out the mistakes. That mistakes we will write down in what should have been done. Now we will prepare a statement showing the correction. Here I will take X, Y and Z. Here I will say particulars. Okay. Debit, credit, now first of all I will take the profits already credited to partners capital. What are the profits that have already been credited? Already credited profits are 3 lakh, 3 lakh and 1,50,000. These have been wrongly credited. Now I will debit this amount. 3 lakh, 3 lakh and 1,50,000. Clear? Now the profits which should have been credited, the profits are 7,50,000 minus 30,000 towards partners loan, right, in ratio 1:1:1. Right? That means 7,20,000 is to be distributed in the ratio of 1:1:1. Why? Because the partnership deed is silent as to the profit sharing ratio. Therefore, the profits have to be distributed equally. Right? So the profits credited will be 2,40,000, 2,40,000, 2,40,000. What is the net effect? Net effect is 60,000 debit, Here also 60,000 debit, right, and here 90,000 credit. So what will be the entry is X will be debited, X account debit, Y account debit, because see, X and Y were getting a bigger share, 2:1, but that was quite unfair on the part of Z. So we have taken some money from X and Y because they were getting more amount which was not allowed as per the provisions of Indian Partnership Act. So to Z account 90,000, and we will credit the Y's loan account because we have paid interest on loan to Y. So the Y's loan account will be credited with 30,000. Clear? This will be the rectifying entry. Please prepare proper journal for this entry, right? In exam, don't do it like this. Prepare a proper journal entry. Okay? Clear? This problem? Very simple problem. There were two scenarios. What has been done? What should have been done? Right? And on the basis of that, we prepare one statement for correction. The profits which have been wrongly credited to the partners will be debited, and the profits which the correct profits which should have been credited to the partners are credited to the partners, and the net effect will pass a rectifying entry for that. See, in the general terms also, if you say see X and Y were getting more amount which was not allowed under the Partnership Act. So we have taken some amount back from X and Y, and Z who was being underpaid, right? So we have taken some amount from X and Y, and we have given some amount to Z, and moreover we have given some amount to Y as interest on loan, right? That's why the rectification entry is X account debit, Y account debit to Z account to Y's loan account. Clear? So you can write this down. You don't need to prepare this in exams. Don't prepare this in exams. This is just for your understanding. You can prepare it in the rough work, but don't prepare it in exams. Okay? Prepare this statement and the rectification entry. That's it. Right? This is just for your understanding, that prepare two scenarios, what has been done and what should have been done. So you can write this down.